Good morning, I'm Carol Harmer from the International Trading Institute, and today I'm going to look at the Aussie dollar, Kiwi, which is the New Zealand dollar, and more importantly the Aussie Kiwi cross. Now, when you come on our course, it's going to be full on. I don't expect clients to be as anal as I am, or to put in the amount of hours that I used to, but I think what you need to do is, whenever you're going to take a trade, there are ways that you can confirm what will be the trade to do. I mean, if you're trading the euro, you look at euro yen, euro Swiss, euro sterling. You know, you just glance at them, and if you're doing outright euro dollar, you know where it is against the other currencies. And I don't think you can trade to your full potential without knowing where the other currencies are within the chart. Now, I know that sounds a bit highfalutin and, you know, workaholic-y stuff, but this is what we aim to do, because our aim is to try and get you to use what we teach you so that you can go forward in your career and also be able to trade any market at all with confidence. And if you're going to be a strategic trader, which is what I can only teach strategic traders. I can't teach traders that want to look at a 5-minute chart, because to me it's not profitable, and you just get caught up in a load of noise that you don't need to get caught up in. But if you trade strategically, then I think that you stand an excellent chance of becoming a trader that's profitable, and also a trader that will carry on this career for as long as you want it. I mean, I have had an 86-year-old man trade the FTSE in Malta round his pool, and he was fine. You know, he just kept on going. So this is our aim at the International Trading Institute, is to be able to give you all the tools to make you into a profitable trader. And we have the mentors to do that. It's a long course, but then it's better to learn in 2 years than it is to just jump in the deep end and lose your money. Anyway, it's very hot in Spain, so I'm going to take my jacket off while I do these charts for you. That's better. I can breathe now. I can't even have the aircon on in here because it makes too much noise, because it's there. It makes too much noise. Right, without further ado, let's have a look at the Aussie dollar. Now, with the Aussie dollar, what it does is it barely moves for a good length of time, and then all of a sudden it's pow, off we go. Now you can see that the Aussie didn't really make a top there. It just sort of, if I bring that down a bit, what the Aussie did, it closed higher there, September 24, and then the next day closed lower, and off we went again. Now, I have to tell you, I don't really look at fundamentals, so I will leave it to the fundamental guys on the course, the mentors, that will explain why. All I am is a technical strategic trader, retired, and I'm going to impart, hopefully, my knowledge onto you. Now you can see twice the Aussie has been capped by the 200-day moving average, and that is at 0.6306. I'm sorry, it's 645.064572. Okay, I'm looking at fib numbers. Right, and twice we've stopped it. Okay, it went up, it failed to close above it, it closed on it, and then the next day down we came. You've got all this glut of support around here, and you've got these moving averages, the 50-day, coming in at 63.06, which is around about the 38.2 fib level. Okay, so the Aussie isn't really showing us anything exciting. So what we're going to do, we're going to go on to the Kiwi. Now you can see the Kiwi when it rallied, again, not here, we didn't have no inclination that the Kiwi, which is the New Zealand dollar, I'm sorry, I'm used to Forex, I'm used to the FX dealing rooms where, you know, we call currencies by their name, but it's Kiwi, but it is the New Zealand dollar, obviously. But you can see where the Kiwi made a double top there, and we've started to come down. We are currently below, or just nudging, that 200-day moving average at 58.82. We're trading at 58.86. So we need some momentum behind this. If you look at our indicators, you can see that on a very short move down, we've alleviated the overbought condition, and we are beginning to turn, and we haven't turned yet, but we are beginning to turn to show a move higher. But with this double top in place, you have to be prepared that you've got above the 23.6, you've got 59.03, and then you've got these three up here are gonna, you know, try their hardest to put a stop to any further movement higher. Now, with these two currencies, what we like to see is, or what I like to see, is confirmation. Now, I probably make a lot of work for myself that I shouldn't really do, but because I do technical trading, to me data is everything. It really is. It's got to be, because you can't analyze a chart and explain where it's going to go if you don't know the data. So you really need to make sure that the data you're receiving is the correct data. Now, I've ran TradingView since 2015, and I have to tell you, on the professional platforms that you have to pay a lot of money for, TradingView is probably one of the best retail platforms that I've come across for pricing and data. And we like pricing and data, so I'm quite comfortable with this this system being used, because I have the 2 or 3 systems running in the background, and there's hardly anything that would make me say this is a wrong price. It's not IG, which was awful. I don't know what it's now like. I don't use it, but I do know that TradingView is very good. Now, if you're trading the Aussie and the Kiwi outright, and don't forget, if you are in that time zone, it's easier. Because I'm an experienced trader, I can trade into Australia, into Asia, and be quite comfortable leaving my stops in now. It never used to be like that. They used to stop you out all the time. But now I find that they don't, and you can run a position. Now, if you're trading the Aussie or the Kiwi outright, you cannot, it's like the Euro and the Dixie. You need to know what the Aussie Kiwi cross is doing. Now, the Aussie Kiwi cross is a cross rate pair that is actively traded. So let me take you onto that chart and you will see exactly what I mean. Now, the Aussie Kiwi currency pair, and as I say, very actively traded, and you can see quite clearly the double top, which would mean the Aussie would decrease against the Kiwi. All right, so if you're long of Aussie, this is your, oh my God, you know, what would I rather be long of, Aussie or Kiwi? You'd rather be long of Kiwi at this stage because the Aussie is going down. And you can see also where the Kiwi and the Aussie chart against the dollar didn't make a top. The Aussie Kiwi did. It made a double top here and here. So these are the things that you're looking for. You want to see what the correlation is within the markets that you're trading. So at the moment, we've had a turnaround. At the moment, what we're doing is we're seeing strength coming back into the Aussie. And so when you look at the Aussie Kiwi chart, you can see the base, you can see where then you would cut your long Kiwi, short Aussie position. I mean, I prefer, I do love the Aussie Kiwi chart. It trades perfectly. It really does. And it's probably one of my favourites, and one that I personally have made quite a bit of money from. But all this is trial and error. You know, all of this that we're going to teach you at International Trading Academy is that, or Institute, all this that we're promoting now is to make you aware of the intermarket correlations. So being a strategic trader, which is what I'm hoping you're all going to be, being a strategic trader, you need to know these correlations between the different markets. You need to know the ones that work. You need to know the ones that the market is looking at. You need to know, you know, you just need to know. What comes second nature to me, I've now got to teach you in 2 years my 40 years of knowledge. And although I can do it, and I can do it, it's going to take hard work and it's going to take a lot of time. But you can see where I pointed out the Aussie didn't really do anything to top, the Kiwi didn't really do anything to top, but the Aussie Kiwi did. And that's why you have to look at these different markets. I wouldn't look at the Aussie against anything else. I would only look at Aussie against the Kiwi, all right? Because that is the standard cross rate for the two individual markets against the dollar. So it's all changed. Aussie's going higher. However, we're going to hit some good resistance up at the previous highs. We're past the 50-day moving average, but these previous highs come in just under the 50% fib at 109.14. And you've also got this where it held downside support at around 109.40. So those are your levels. You've got to break up above 109.14, clear this area of 109.11, and then we can go up to 109.76 and beyond. Okay, there wasn't really a pattern that showed that the Aussie Kiwi was turning. It was just that it was extremely oversold, understandably. You've got your RSI that's looking a bit peaky, and you've got your momentum beginning to wane. The RSI hasn't turned. We've got flat stochastics. But my point that I'm trying to get over is that unless you look at these intermarket correlations, you're not really going to get the benefit out of the trades that you take. You're not going to get you're going to be missing the information. And to be frank, all the information is in the chart. You can see it, so have a look. Go into these other crosses, go into Euro Swiss, go into Euro Yen. Have a look. If you want to be long of euros, what's it doing against the other currencies? If you want to be long of sterling, what's it doing along the other currencies? You need to have the whole picture. And maybe when you start off, it would be easy to start off with a small amount of currencies to look at, because when you look at the intercorrelation markets, you will find that, they will give you a little bit more of an advantage, and that is what you need to be taught. You need to be taught what markets move, how it happens, what you're looking for, and I think you can make it. Okay, well, that's me done for the morning. I wish you well. I hope you have a very profitable day, whoever's traded, and I will catch you all tomorrow.